Yo guys, it's John here with Option Lab. In this video, I'm going to be talking about 3 stocks I'm running the wheel on this week. I'm going to break down each of the trades and why I took them. Today, the market was down significantly at the open, which is why I hopped on a few of these positions. I'm going to run through each of them, and if you guys are not familiar with who I am, I did 2.2 million in 2024 with option premium selling strategies. I'll refresh my account here so you guys can see that. Right here, it's down a little since the market's been down a little bit the last few days. But anyway, all of these trades, all 3 of them were alerted in my Discord. So if you guys are not yet in my Discord, hop in. I alerted all of these live the last few days. The link is in the description. The first 10 people to DM me print, I'm sending a 1-day free trial. Okay, so let's go through and break down each one of these. So general considerations that I had when taking these trades. So if you guys are not familiar with what I do, I mostly sell options. So things like a cash secured put where you have a stock and you sell a put to open. And as long as the stock stays above your strike price by expiration, you collect a premium and keep that premium. Okay. So the general considerations when I took these trades were as follows. Take advantage of large red days by writing short-term cash secured puts on stocks that are down significantly, expecting that this short-term overextension downward will be followed by a small recovery. So what I'm looking for is short-term overreactions. So things that cause IV to spike, like a sharp downward move that allows me to get the stock on discount, right out of the money cash secured puts that would require the stock to go down even more after it's already overextended in order to be assigned, collect a large premium due to the high IV, and then if I do get assigned the stock, I now own the stock that has dropped a lot and is likely to experience a correction move, which opens the door for me to write covered calls. So if I'm owning a stock that has taken a sudden spike down, usually that sudden spike down is followed by a short-term correction or a bounce. In that time period, if I'm not assigned the shares, I just keep my premium. But if I am assigned the shares and it goes below my strike price, I can now write covered calls and flip the stock for a profit on the way back up. So typically, I'm looking at 30 delta and 7 to 14 days till expiration on this type of move. So let's look at what some of those look like. So I'll start with, I think this was the first one I took, which was MSTR. So if you see here, I took this actually last week, but I alerted it live. And we can actually go through here and just break down each part. So it was the MSTR 131.25. So that's this upcoming Friday. It was a 347.5 put. And for opening that trade, I collected about 9,000. So that was 9K pretty easily. Now, the problem is if we look at MSTR where it's at, let's see if I can click in here and it allows me to type. I don't know why it's not allowing me to type. There we go. So if we see MSTR, and you can see I actually have another order out right now, but MSTR is actually floating just at 347.5. So if we see here, this position is literally right at the money. And as you can see here, I also have this 305 put open as well. But these 347.5s at the time of entry, this was under, I think it was like a 12 to 14 delta. And now, as you can see, just how fast MSTR can move, that option is almost in the money. Now, the beautiful thing about this is if we look, for example, if I am assigned this Friday, and if we look at the option chain for Feb 7, you can see that on those 10 or potentially 1,000 shares that I'm owning, we can see the call premium to flip out of these is massive, right? So 10 of these is 24K. Right, 24,000, right? I collected 9,000 on the puts, on the CSPs, and then I'm potentially going to collect 24K if I'm assigned and I write covered calls. That's a massive percentage return trade. Granted, there is a chance that MSTR just continues to drop and I get totally effed. So that's always a possibility. Let's move on to the next one. Okay, so I think this was the next one I took, which was Tesla. So Tesla has an upcoming earnings. This one is a little riskier. I kind of advised in my group not to put too much of your buying power in this, but for me, I'm trading a larger account, so it makes sense. I did the 367.5 puts, sell to open, 131 this Friday, and we can actually look at that in the chain and see how it's doing. So let's go to Tesla. Okay, so as we can see here, this is looking really good. On a 5-minute chart here, we have plenty of room. Granted, there has not been earnings, and if we go to the 180-day chart, we see here the earnings is in 2 days, and I'm at 367.5. So 367.5 is roughly, somewhere in here, right? So getting closer to that moving average. If it does drop, I think we'll have a cheap enough price to then write covered calls if we get assigned and flip for a profit. Anyway, that was a good $7,000 in premium for opening that trade. Okay, next. I took this on my small account. By the way, if you guys are not in my small account challenge, hop in the my free Discord. The link is in the description and just shoot me a DM. So this one was Nvidia. So Nvidia, Broadcom were dropping significantly today at the open, so I figured I'd take advantage and try to get some skin in the game. I wrote the 116. I sold to open the 116 put for this Friday, and for doing so, collected about $150. And if we look at where that is, I believe that one is actually approaching danger. So if we look at let's look at a 20-day chart. Yeah, you can see here just this significant gap down in recent days, and we're sitting around 116, which it actually almost touched today, believe it or not. So this one could be in trouble, but the beautiful thing is if we look at this gap, I believe that we could easily see a recovery into the 125, 130 range in the short term, which means that if I can get the stock at 116, I can quickly write covered calls and flip out, hopefully. Okay, so on to the next, and this was the last one, which was VXX. So as you guys know, when the market drops, I made a video on this, which a bunch of you guys in my Discord actually trade this strategy. When the market drops, VXX goes up, but VXX over time bleeds to zero. So what we do is when volatility in the market is high, we sell to open naked calls or short calls, collect a premium for doing so, and then if we are assigned short shares, we then ride it down with kind of like a reverse wheel strategy. So let's look at VXX, and I'll show you kind of some of the orders that I have out on this. I have a bunch out right now. You can see here, actually, take a look at this, guys. My open P&L on this position is 281K, right? So this just goes to show you, if you look over time, VXX bleeds pretty much down towards zero. So I'm fairly comfortable being short shares here. And as you can see here, I have, you could read through these orders and pause the video if you want to see the individual orders. But that was another thing I did today because, as I said, today was a perfect opportunity with the market dropping and IV higher to write short calls on VXX. So if you guys have any questions about the trades I just outlined, leave a comment below this video, like and subscribe, hop in my free Discord if you have not yet, and I will see you guys in the next one. Peace.